It's about that time of day again. My name is Joseph. Monday evening, October 22nd. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan tonight is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish, but we're running right into the high of last week's range, so I want to stay away from buying breakouts and focus my attention on traps tomorrow morning. The S&P is bearish with a triangle pattern tonight, so my plan is to look for selling opportunities using buyer failures above that range. And remember, with a triangle, we're focused on those swings tomorrow. We're going to grab a look at that S&P chart in a moment. Nasdaq is bullish within range this evening, so my plan is to buy the lows, and I'm watching for a measured move, a measured pullback for the best entry location tomorrow morning. Gold is range bound, a triangle pattern tonight, and with price trying to break out to new lows, I'm looking for buying opportunities using the two-try failure pattern here for tomorrow. And wrapping up tonight on the euro is bearish with a strong spike lower. That tells me to look for selling opportunities, and I'm hunting for resistance levels for the euro tomorrow, and I've got my eyes on a key trap high into a hidden channel combination. You're not going to want to miss this euro chart here for tonight. Got a big newsletter in store for you guys and gals this evening. We're back after the weekend break. We're rested. We are refocused, and we're going to have a great week on this nightly newsletter. We got some big news and some big opportunities setting up for tomorrow. Before we jump into these charts, though, I need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of this video. If you have any questions about anything covered in tonight's video, if you're on YouTube, drop those questions in the comment section below. If you're here on the blog, just post the comments in the comment section as well. And if you like what you see, please help support this channel by subscribing. And don't forget when you do to hit that bell icon, that notification icon, so you get notified every time I post another video. And don't forget, if your goal is to become a consistently profitable trader, you can get your transformation started by going to our blog and joining our mailing list right here in front of you. All I need is your name and your email address, and I'll show you how to get that transformation started. Don't forget, if you want to download all the charts from tonight's video, right? If you're on the blog right now, all of the links to download all the charts from tonight's video is right below the video tonight on the blog, so grab those charts. And if you have any questions about anything here we talk about tonight, don't forget you can call that toll-free number or use that live support tool in the upper right-hand corner. Man, it feels good to be back with you guys here this morning, right? Hope you guys had a great weekend out there. We're back in the action. Got a big week ahead of us. Better get some money out of these markets, right, until we get the World Series starting tomorrow night. Boy, oh boy, don't get me started on that. I still haven't decided, right, what T-shirt I'm going to be wearing, what team I'm rooting for this year. I'll get back to that towards the end of tonight's video. For tomorrow, though, Tuesday, October 23rd, before the game starts, right, what do we have here tomorrow morning? Not much, as you can see here on the calendar here for tomorrow. Tuesday, 23rd, it's pretty much wide open. So really tomorrow, we're going to be watching those opening bells at 9 o'clock on crude, 9:30 on the E-minis, 10 o'clock, of course, that 10 o'clock shock, and 11 o'clock is that transition into lunch. Those are the main milestones that we always look for every morning. And speaking of every morning, did you know that we open up our trade room every morning at 8 o'clock Eastern time, and we're going to execute this strategy together with all of our clients, right? Speaking of strategy, let's dig in and get those charts opened up right now. Now that we know the plan, or we know there's no news tomorrow, and we know, right, we're watching that 9 o'clock, 9:30, 10 o'clock, 11 o'clock. Now we know where the milestones are. Let's see what our plan is going to be for tomorrow morning's trading session. Starting off tonight with crude oil, then we'll go to the E-mini S&P, then to the Nasdaq, the gold, and of course over to that euro. Get a great chart for you guys right on the euro tonight, so make sure you stay tuned right towards the end. Crude, first of all, crude is bullish with a wide trading range, very important resistance trend line, right, and measured move and spike in channel on the chart this evening. So trading range, resistance trend line, measured move, and spike in channel on the chart this evening. Crude is clearly range bound, right? We can see this range coming out of last week's right, last week's session. We're clearly range bound after that big drop, right, last week. So we're definitely range bound here, right, in the big picture, but the short-term momentum is quite bullish right now as price rotates off the lows of this wide channel. Now that tells me that I should be able to get at least one more buying opportunity before we finish this pendulum swing and that measured move back up around that 69.80 area though. Knowing that I want to be a buyer, but we're at the top of this trading range. I've also got this trend line coming down overhead. I really got to be careful here, right? I don't want to be a buyer, right? I don't want to be a buyer into that falling resistance. So what I'd rather do is wait for price to pull back, right? So I can buy nice and low, right? Using, for example, the low of this, right, of this kind of hidden channel here. So that's the overall plan here right now, is trying to buy before we get to that measured move up here. Again, that measured move should be able to complete it. We also should be able to rely on a bit of a pendulum swing there as well. So I would imagine that 69.80 up to that 70 area, we should be able to get that area done. The question right now is do we go lower or do we go higher to get there? That's the big question. Now, really this all comes down to a range. And you might be wondering right now, or you might be scratching your head right now going, wait a second, Joe, it's a trading range. Why are you saying to buy right now? Aren't we at the top of that range? Shouldn't we be selling this? Well, let's talk a second here about the differences between a narrow range and a wide range, right? So for example, if the market is a narrow range, bear market into a narrow range, right? Yeah, we're going to sell that high, right? Because there's no bullish momentum involved. But if I have a wide range now, same thing, right? We go into a trading range. Now, as I'm going higher here now, you better believe it, those bulls have full control over this market right now. Now, they may not get that much further, right, through the high of this range, but typically when we see a strong move going back to the high of a wide trading range, typically you're going to see an opportunity here to get one more leg out of it. And I've got that measured move waiting overhead. You want a good example of that? Look back here, right? See what happened back here? We had almost identical situation back here. We had that strong move up, right? And sure enough, right, they're going to try to get that sucker, right, going back up to retest the high. You'll notice they didn't get it, right? They didn't get it. So it's not a guarantee, but typically when you get that strong momentum moving higher, like we're seeing right now, typically you're going to get, right, another shot here, right, to run that thing higher again. And that's ultimately what we're looking for, because right now the markets are simply too bullish to want to sell this thing, right? I wouldn't want to sell this market right now. So what are our options here right now? Basically, we know we have an idea of where that big target is, right? I would imagine it's, again, somewhere between this 90, 80, and 70 even area. So what you're thinking is either come down to buy off support, away from that level of resistance, or we've got to go up and then look for the pullback to get that next leg higher, right? So here's what you're looking for. Basically, I'm looking for a combination here of a trap into a two-try failure pattern, and it's going to look a lot like this last one right here. Up, deep pullback, let them try twice, and then buying back up. What I'm looking at now is I've got that swing. Again, first scenario, I want to buy off support, buy on the pullback. What if price pulls back? Keep your eyes in that 29 area, right, because that's going to be a hot spot for us. So pull back into a trap, then we go below the moving average. The bears now will see this as a chance to reverse the trend, and then we're going to look for that buy now, right, going back up to those highs. So we have potentially here two buy patterns. One is going to be a trap, again, below that prior swing at 29s, trap low. Next one's going to be, right, that two-try failure pattern. So we come down, right, trap, that's the first try for the bears. Then we try again off the moving average. That's the second try for the bears. Now we know the bears are all roped into this position going short. We know the momentum is too bullish. And once those bears get stopped out, we'll be sitting there, right, to buy into those stops, right? So we get a two-try failure and a trap pattern setting up here if we can get that pullback. First things first, get the pullback, good trap signal, second try off the moving average, right, and then back up we go. Combining a bull momentum with a level of support, without buying into that range high, right? We got everything we need. Okay, when I think about taking a trade, I always ask myself a number of questions. One is, am I going with the momentum? Am I incorporating support and resistance? Do I have the ability to risk small to earn large, right? And then can I get a good entry pattern? All of that will be covered if I can get that scenario tomorrow morning. So that's the idea behind the pullback, if we can get the pullback. Now, if we go higher here, this is where a lot of this is going to have to do with how we go higher. For example, if we blast higher here right now, right, we blast higher here, all that momentum tells me we should be able to buy a pullback and do it again, right? Anytime we see a strong move in one direction, we should be able to use that momentum to carry us, right, to another leg higher. The other scenario would be, what if we just go up and we struggle here, right? We struggle. You know, those are the two scenarios you're kind of thinking about right now. So first scenario would be, what if we jump higher, right? We jump higher. At this point, if we jump higher, we go higher here, I'm going to go out and find a new channel off the highs. I'm going to mark up that channel off the highs first, and then I'll look for that pullback. And it'll usually be, let's do this differently here. Let's go this color. Get out the crayons here, right? Okay, so new strong move up. We find that new channel, right? Find that new channel. Bingo. Then moving average comes up. We look for that pullback, right? That pullback, one try, two try. Let those bears try once below the moving average. Let them try twice below the moving average. Okay, then we look for that entry long, right, going back up from there. Again, it's going to look a lot like this pattern right there, right? Up, one try, two try, get below that moving average, and then blast off the upside, right? So if we do see it, 1, 2, 3, find that new channel, mark up that channel low, pay attention to that pullback, wait for that one try, two try, lift off, right? One try, two try, lift off. Two try rule, one try, two try, and we can look for that. What I'll be looking for is, I'll be looking for what I call that two try failure into hidden channel pullback, which would be that strong move up, moving average comes over, right, and then pull back from there. So you've got your two try failure into that pullback pattern, into that next, at this case, right, in this point, it'll be a measured move, 1, 2, 3, right? That'll be our final target as we go higher. So that's if we really blast higher here, right? If we really blast higher, it'll be that hidden channel, right? Into that two try failure, right? Into that bull pullback. Okay, great opportunity there if we get that blast higher. If we don't, if it just sits up here, this is where we're going to have a little bit of trouble here. If it sits up here, now we're probably going to go range bound on us. And with that, keep your eyes on that trend line, and we'll look for that trend line, two try rule, right, to buy off that low. Whenever I have a trading range, I always want to ask myself, right, bull bias, let those bears, one try, two try, and then buy right back up, right, buy right back up. Now, we've talked about all the scenarios now for the bulls, right, so we know we're looking for that hidden channel now, two try back up. We know if the market jumps, hidden channel, buying off that low. We also know if the market gets stuck up here, right, in a range, we know that momentum will probably allow us, right, to buy below that low. Those are three great scenarios that pretty much cover all the bases there. How do we sell? Right? How do we sell? Well, the one problem about a wide range, and you will soon, if you haven't realized this yet, but wide ranges, it's difficult to time the reversal. Let's take, for example, as the price went lower, right? That strong move down. Look at how strong that was, right? Are you going to really buy that? That's a tough buy. It is. It's a really tough market to buy, right? I don't buy those, right? I don't look for one try, two try, buy back up, right? I'll gladly do that when the range is smaller. When the range is wide like this, what I'll do is I'll wait for that two try failure and then buy that pullback right there, right? That pullback is a whole lot more reliable trade. Okay, and you can see what happened. Everybody jumped in once they saw that pullback, right? Then, of course, you're going up, find that new channel, right? And you're buying that pullback off that channel, right? So it's really difficult to sell. So one try, two try, what I'll do is I'll wait for that strong move down. I'll get that moving average coming over, and then I'm going to look to sell from there, right? Because that momentum is so strong. Again, when the market is narrow, when the range is narrow, absolutely, we can go one try, two try, back down in, one try, two try, back up in. That's easy because there's no momentum. When the momentum gets whipping around here because these wide ranges, right? Wide ranges there. Now by the time I go down, I can't trust that to try. I've got to now get back above it, right? And then I'll buy that pullback going back up. Same technique, selling off the high here. Let that momentum, one try, two try, momentum shifts, moving average comes over, you got it, right? And we're selling. Again, maybe we get a chance to use that trend line after all as resistance, but we're looking to sell as we make that move back down. Again, the key is going to be one try, two try off that high, right? And then get that momentum turning back over. For now, though, we're bullish. We're bullish with a capital B. We don't want to be a seller yet until the momentum shifts. And don't forget, these can be confusing. The markets can be confusing right now. So no better place to get a good strategy and get a good plan and get a good head-on straight here than every morning in our trade room. Now, speaking of trade room, I want to teach you more about some of the favorite patterns that we use every day in our trade room. Two-try failures, pullback patterns, trap patterns, hidden channels, all the different patterns we've talked about so far. I've got a lot to cover on tonight's newsletter, and I'm going to keep this party moving forward here right now. But I want to make sure if you're here for the first time today, or maybe you actually want to learn all my favorite entry patterns, right? I'm going to put a free trading course in the upper right-hand corner. I'll also link it up below the video on the blog. I'll drop it in the description of the YouTube video as well. So if you're here for the first time, or if you just want a deeper dive, I want to teach you more about this strategy. I've given you the basics of this, but I'd like to teach you more about those two tries, right? Those hidden channel pullbacks, all my favorite entry patterns that will go great in combination, right, with this newsletter video. So get the most out of this video here with me. Grab that free course up in the upper right-hand corner. You'll see that information icon up there, or grab it in the description or below the video on our blog. And let's keep moving because I want to make sure I cover the rest of these markets you guys to trade. And then, of course, right, I'll see you for a deeper dive inside of that free trading class. All right, how about some S&P here right now? S&P is bearish with a triangle and a measured move on the chart this evening. The triangle is pretty obvious here right now. It's a pretty obvious bear triangle. We've got that bear move down into this triangle. We got higher lows, we got lower highs, higher lows, lower highs. This market is bearish. It has a range. It has a range on it, and it's got a bear bias to it. So knowing now that we have this bear bias to that trading range, that tells me I want to sell up at these highs. And the most important thing about a triangle is usually the best trades are going to come around the edges. This is the one, there's a couple big differences between ranges and triangles, right? Ranges are pretty simple, besides the fact that you've got to be aware of the wide ranges versus narrow ranges. Ranges are pretty simple where you're basically looking to fade those breakouts. One try, two try, right? Let those buyers try once, let them try twice. And again, I got a lot of rules that I use for these two try rules, right? These two try failure patterns. So make sure you grab that free trading course I talked about earlier. It's in the description. It's in the upper right-hand corner as well. So grab that and you'll learn all the nitty-gritty details about those two try patterns. But when it comes to a triangle though, triangles can be a little bit more tricky because what you want to remember is there's two things that are different about a triangle. One is you want to really focus on those edges, right? The edges, the edges, the edges. That's where you're going to get the best trades, right? Off those edges. The other scenario, other difference is you got the point where it comes and gets too narrow, right? Ranges don't do this. So triangles get too narrow. And when triangles get narrow, we usually end up seeing a nice big breakout or a potential failure. For example, when it gets really narrow like this, nobody wants to trade when it's really narrow like that. You know, it's a lot of the same market psychology that goes into wedges or narrow channels. When the market gets really tight like this, almost like a squeeze, right, where the Keltner channels and the Bollinger Bands are inside of each other, right? When that volatility is really low and you get those big breakouts, right? That's usually what happens here. So what happens on these is we typically see some sort of big breakout, right? And that's one thing you want to keep an eye on, is we oftentimes see either a breakout, hold, and true reversal, or we see a breakout, a two-try, and a failure back down in. These can be some of the best two-try failure opportunities here you get, because they really catch a lot of those breakout buyers on the wrong side of the market. So as I go back to my chart right now, there's my triangle. There are my edges here. We know we have a bear bias to it, so we definitely want to be a seller here. We want to sell up around these highs. And again, we're starting to get down towards that nitty-gritty area here, so we may be in store here, right, for a big breakout of this trading range. So basically, the way I see it is, until we get down to those really tight quarters here, I'm going to look to keep fading these breakouts. Just like we saw back here, you can see it's exactly what happened here. Oh, and it happened right here. Oh, and it happened right here too. Some great examples, right, of these two tries. We go up, one try, pull back, two tries, fail back down. We go up, one try, pull back, two tries, fail, back down. Should we keep going? We go up, one try, two try, fail, back down. There's no reason to think this won't continue happening here for tomorrow. We go up, that's one try, pull back, let them try twice, then we sell into the stop losses of those buyers. Think of the psychology in the market at this point. You know, I get the question all the time, how is your strategy different, Joe? I've been doing this for so long. Why didn't I see success before? But all of a sudden, I start using your strategy in the trade room, and now I'm making consistent profit. What's the difference? The difference is psychology, right? Everything I do in my trade room, everything I do on this newsletter, I'm always putting a face, or I'm putting a human being behind the candlesticks. You know, when I was a rookie, I started my career, much like I'm sure a lot of you guys did, just relying on indicators. The problem is, when you focus on indicators, you're missing this huge important clue. And that is, these are people out there trading this with money on the line. And those people, when they get into a big group, what do? They do foolish things, right? Well, what do we got coming up? Thanksgiving, it's 3 or 4 weeks away? You want to see foolish people doing foolish things in a group mentality? Black Friday, the day after Thanksgiving, right? Go camp, don't camp out. Just go to YouTube and watch the live stream, right? But you'll watch some, maybe not foolish, but I'll tell you right now, individual people wouldn't camp out at 6 o'clock in the morning for a DVD player, right, on discount right now. They certainly wouldn't. But when there's a group of people involved, what happens? When groups of people are involved, the group takes on a different personality, and the people do things they would never do on their own, right? The mob mentality, the crowd mentality, whatever you want to call it, right? Everything I do with this strategy has to be seen through that lens. Yes, I am going to use some indicators, but I'm going to only use those indicators when the crowd, when the mass psychology, when the group think, right, allows us to. So what I do is I simply anticipate, right, what those foolish groups are doing, and then I simply trade against them. And that's exactly what the two-try pattern is. That's all it is, right? I know the market rushes higher here, for example, right? I know when a group of people see a rush higher, they're going to say, I better not miss this. I want to buy that pullback. Little do they know there's a huge trend line coming down here. The market is not bullish, and surprise, right? The trade fails. That's a great sell, right? That's a great sell, because you know the market structure, and you're just waiting, right, for those foolish groups of people, right, to wrap that rope around their neck and hang themselves, right, because they can't help themselves, right? Those are traders who are just focused on indicators, right? They're using moving average crosses, Bollinger Bands. They're not seeing the big picture, right? They're driving their car by staring at the hood ornament, right, not the car in front of them. And they wonder why they keep running into somebody right from behind and getting fender benders, right? So we're paying attention to that big picture, right, and trying to capitalize on people making foolish mistakes because they're part of that mob mentality. Okay, bottom line though is, right, we know this stuff happens over and over again. I want to see it go up. I want to get those buyers to try to buy that pullback, right? And then we know where their stops are. Once the stops are, now we can sell back into them, right, and drop that thing back in. That takes our first one. Now from there, right, once we have that two-try failure, I can now go out, find that new hidden channel, and look for that follow-up trade, right? Now, that will obviously need to be away from the middle on this, but you can see it right here, right? A good example, one try, two try, failure, right, follow-up pullback. One try, two try, failure, follow-up pullback, right? I'm not making this stuff up. You can see these patterns over and over and over again. So that's the plan if price goes lower. Now, we get a bear bias on this, right? Bear bias on this. So with that bear bias, do I want to buy down here? Can I do that? You can, but it's not going to be as reliable. What's a lot more reliable in a bear market, if you wanted to buy one try, two try, the problem though is that when we go lower, there's going to be a lot of traders here looking for traps, and they're going to try to sell that trap high. I wouldn't do that, but it's with the momentum, right? So it's going to happen. You're going to have sellers there trying to sell those traps. What you want to look for is wait for that move up, and again, we talked about this on oil, right? And then look for that pullback and go up from there. That's a lot more reliable pattern here, right? Looking for that, again, what I call that hidden channel pullback pattern, right? Don't try to mess with that counter trend to try. Wait for that hidden channel pullback, right, and buy off that low. Now, we talked about potential breakouts. What does a breakout look like? I call it a 1, 2, 3 breakout. 1, 2, 3 breakout, right? Also referred to, right? Also appearing as the 1, 2, 3 reversal, right? I'm kidding around with you. If you watch my newsletter every night, we joke around with this all the time. The 1, 2, 3 breakout and the 1, 2, 3 reversal, right? What's the key here? The key here is strength, right? That's the key, strength. Right? It's a 1, 2, 3 breakout. It's a 1, 2, 3 reversal. There's an exclamation at the end of that, right? Of the end of that statement. What I mean by that is that if we're going to break out, it's got to be strong. How strong though? Well, look back here. Good example right here, right? Look at how strong that move up was. Now, there's a good reason why buyers bought this, because they clearly did not recognize this as a range. I'm not sure why, right? Higher lows, lower highs. But anyways, the bottom line though is that strong move up, when I was a rookie, I would have thought, oh yeah, we're breaking out. This thing's going higher. But sure enough, look what happens. It pulls back and dumps back down. Not just this one. Look at this one back here. Right? We go up, we pull back, they try, and they fail. So it's not enough to get a strong move up, right? It's got to hold that pullback. Get this out of the way. There we go, right? Strong move up, right? Got to hold that pullback. And we get to see this thing jump, right? That's the strength I'm talking about. This is the 1, 2, 3 reversal, the 1, 2, 3 breakout. Now, pay attention here because we're now too high to buy. We're now bullish at this point, or bearish, by the way. 1, 2, 3 breakout. That will work too, right? But now we're too bearish. Now we're too low to sell, right? I'm not selling down here. We don't sell low. We sell high. We don't sell low. We sell at resistance. Where's resistance? Mark up that swing. Mark up that low. Find that new channel. Yep. Hidden channel pullback, right? Spiking channel pullback, whatever you want to call it. Right? So if we can get that strong move down, 1, 2, 3 breakout, or 1, 2, again, got to pull back to the moving average here, 3, 1, 2, 3 breakout. Now what do? Mark up that high, mark up those highs, find that new channel, yep, bada bing, looking to buy that pullback now, right off of that low. And if this thing breaks out to the upside, watch out, because we could see a nice big rally all the way back up to that big round number, right, at 2,800, and possibly towards the end of the week, right, be back up to retest those highs, right? So we get some big targets, right, waiting up to the upside. I'm not gonna sugarcoat it though, right? You can easily see we got some big targets waiting down bottom, right? That little flush we saw lower at 2712. Right, that little flush we saw lower, 2712, that could also be on our radar here if we get that breakout going lower. But for now, though, yeah, we're not there yet. We're not there yet. We're coiled up inside of a range, looking to sell high, right? Looking to buy low, looking to fade those breakouts, using that 2-try pattern. Let's keep going. Now from the S&P, how about some Nasdaq right now? Nasdaq is similar here to the S&P, but a very different market though. Nasdaq is actually bullish right now with a triangle, a measured move, and a spike in channel on the chart tonight. The overall chart, right, is range bound. If you look at it kind of a little bit more here, right, you'll notice we're definitely kind of range bound here. In fact, if you go even further out here now, you can kind of see how these trend lines are all really colliding up or really grinding to a halt here, right, inside of that range. So it's definitely, right, it's definitely no surprise here. It's definitely a range. However, though, this recent, you can almost kind of see like an overshoot, right? There's the range. Come on. Range low. There's your range high. Look what happened down here. See how the market almost like made a mistake or something like that. You know what I mean? Like it sold off at midnight or 6 p.m. right, Sunday night. Sold off, and then all of a sudden it was like, well, wait a second, guys, what are we doing down here? This is a range. We got to go back into the range. Let's go. And they start running back into the range. I woke up this morning. I'm like, what the hell is going on with the Nasdaq right now, right? I mean, typical Nasdaq, right? Typical Nasdaq. By the way, the same people, right? The same people who are standing outside of that Best Buy, right, at 6 a.m. on Black Friday it has the same personality as the Nasdaq. I always thought it'd be really funny here. The same. Anyways, let's keep going. I got a lot to cover here tonight. The bottom line though is you can see that's overshoot, right? That overshoot slams right back higher. So it's quite obvious right now there is that little bit of a bull bias, right, going higher. And so we have that little overshoot. I'm expecting a little bit of an overshoot at the high of this range, kind of that pendulum swinging right back up to get that measured move. So I definitely have my eyes on this area up here. I've got my eyes on this area now for a good target, right, for those buyers. The buyers have momentum, and they're going to want to finish off that kind of pendulum swing, right? Remember, the amount of the move below a range, if we're in a range, the amount of the move below the range can oftentimes swing now back above the range, right? So the amount of move above, right? Below, above, pendulum, right? Get that pendulum right in the middle. Pendulum swings down, pendulum swings back up. By the way, I talk a lot about the pendulum swing technique, how we can use it for entries and exits in that free course, right? Again, if you haven't grabbed it yet, it's still there for you in the description. It's also below the video on the blog. And again, if you're on the YouTube channel right now, in the upper right-hand corner there's this little information icon, right? And they'll take you there as well. So we're expecting to see that pendulum swing. So knowing this, knowing the bulls have the edge right now, I'm looking for support levels, right, to be a buyer off of and to combine those support levels with my entry patterns. And really right now, there are two big clues we have right now. One is this spike in channel. Now, what do spike and channel patterns tell us, right? There is a psychology to everything, every pattern, right? Narrow ranges, wide ranges, right? They all have psychology clues, pendulum swings, right? There is psychology. There's a mindset clue behind everything we see. What does a spike in channel tell us? It tells us deep pullback. And a lot of times, the reason why spike and channel patterns give us such deep pullbacks is because of that original spike, right? Nobody wants to buy high up here. What they'll do is they'll look for that deep pullback down around the low of that first pullback after that spike. So as I look at this, right, and I go, okay, we get the strong move up, pullback, new higher high, that's my spike in channel. That tells me this area right here around that, it's kind of a range there. Let's call that 7120 to 7100. So that area really resonates with me as a great buying opportunity. At the same time here, I'm always a big fan of measured moves, right? I like measured pullbacks, one leg, two leg. That puts us right at the low of that channel. So I've really got my eyes on this whole area down here. I think it could easily go as low as 7,100. It could be as shallow, right, as this 71.38 and change in all reality. So I want to be a buyer, right? And I want to buy into this resistance trend line right now. I want to buy low. and try to hold this thing up to get that pendulum swing, right? That's the goal. That's the goal here for tomorrow. Now, we know what the story is. We know the bulls have it. We know we're range bound. And so anytime we have a range, what do we look for? Right, two tries. Now, look what happened back here. This is exactly what we're looking for tomorrow, right? We had a strong move up. We pulled back below that moving average. One try, two tries, and then back up again. I told you I'm not making this stuff up, right? This two-try pattern happens over and over and over again. What I would also look for is that one try, two try, and then try to get that, right? Try to get that failure, pop higher, draw off of this, come on, Joe, draw off of this, get the colors correct, off that hidden channel, and it will look like that, right? So you've got your one try, two try, one try, two try. And again, I'm just drawing these out right now, but if you want to see hundreds of examples of real two-try patterns, right? That free trading course I've been preaching about here this afternoon, right? That's a great way to see them all. You can log into your account at schooloftrade.com as part of the free course, right? See all the patterns. I mean, literally, wait till you log into the free course, man. It's insane. It's insane how many patterns, how many examples we have there for all you guys. So bottom line, two try, right, into a buy pullback. That's the plan as we go lower. If we sit here and sit here and sit here, stay away from this area. If this really gets all grinded up, right, don't forget it will eventually start to pull back. One try, two try, and buy back up. So if it does continue here to narrow out, just stay patient on it. The hard part's going to be if it goes higher without us, right? Because if it goes higher without us, we're kind of back to that same old story again of, does it really jam higher, right? If it does and goes all the way to that high, we're looking for that pullback, looking to buy off of that low. If we get enough strong momentum going higher here, we should be able to count on that next buy. Right? Enough momentum going through the high of this range, we should be able to get at least one more leg higher. The only question is going to be, do we get a strong move up and do we go sideways up here? Right? If we go sideways up here, still bullish. Now all we need is the one try, two try. Again, get those bears, try twice, and we'll buy into their failure. Right? Again, now momentum needs to turn. So what do we look for? You got it. One try, two try, let those bears, right? Let those bears take it lower, get that strength move down, get that moving average coming over, find that new channel, right? And we're selling off that high, right? Selling off the high of that hidden channel. So I really like the idea of being a seller, but after we make that turn, right, going back down again. So buying off that low with the two try failure, selling off the high once we get that momentum to turn. And again, I realize there's a lot on these range bound markets, and I would encourage you, come out and join me every morning in our trade room. The markets can be complicated, but I've got a great plan, right? I've got a steady hand, a steady mindset, and I'm going to make sure you know where the best opportunities are every morning as a member of our trade room. And you can find a free trial of that on our homepage here at schooloftrade.com. Let's keep going. How about some gold right now? Gold has been notoriously range bound since pretty much the beginning of the month. And we're sideways, right? We get a triangle on the chart tonight. It's pretty easy to see here. Gold's been sloppy, range-bound the entire month of October, which for some traders can easily be a nightmare. I mean, how many people do I talk to every day that say, before I started learning with you, Joe, I couldn't trade ranges, right? But now you've got the range strategy, you know how to do it. Anyone who watches this newsletter or trades with me every day in the trade room knows that ranges are quite simple, assuming you have the correct strategy and the right mindset, right? Mindset's a big deal when it comes to trading because a lot of people know how to trade, but they can't keep it together. And that's one of the big benefits of being with me every day or being with a professional, right, in some sort of interactive environment. So the range is the big clue, and that tells me to fade the breakouts. Range is that big clue, right? That tells me to fade the breakouts using what? Using that two try failure pattern. I want to buy the low. I want to sell the high. And I want to avoid the middle, right? And especially when we start getting narrow like this, right? Remember, that's one of the hard parts of a triangle. Is eventually, once it gets narrow, we will start seeing an explosive breakout, which will usually come right back to where it started. But oftentimes, though, it results in a big breakout and a new trend. So where are we? We're at the lows here right now. What do we want to do at the lows? We want to buy those lows. How do we do that? With the 2-try rule. We have 1 try down. I'm looking for a 2nd try down now and looking for that buy going back up, right, to retest that high. Once we get back to retest the high, again, because it's a triangle, we get our eyes on the swings, looking for 1 try, looking for 2 try, looking for that failure, right, into that hidden channel. This is not done to scale, obviously, right? Failure into that hidden channel pullback, right, and go, right? So 1 try, 2 try, failure, pull back and go, or 1 try, 2 try, failure into pullback, right, and go. I like to use those failures, 1 try, 2 try, right, failure, back down, or wait for the move back lower, right, and grab that pullback. Do not try to just sell it. Wait for the pattern. The pattern will give you that edge over the opposite side of the market. Now, the hardest part of a range-bound market is avoiding that middle. Right? That's why I said mindset is so critical for trading with ranges, right? We want to buy those lows, 1 try, 2 try. Want to sell those highs, 1 try, 2 try. Want to stay away from that middle, okay? A lot of people, myself included, right? I have a hard time sitting on hands sometimes and go, you know what? I want to trade, but we're in the middle of this range. It's just not in my best interest, and I've got to sit on hands. If you have trouble sitting on hands, if you have trouble with that fear of missing out, if you suffer from FOMO, this is another reason why being with me every morning in our trade room, let me be your guide. Let me make sure that I'm holding you accountable to those rules, right? A lot of people that I work with say, before I started trading with you in the morning, right, I would be all over the place. Now I know you're there with me. You're telling me what to look for, what to be watching for. It's a much easier way, right, to do this correctly, and then it takes the pressure off you to be trying to understand everything as it unfolds every morning. So that's the hardest part tomorrow, right? Stay away from those middles. And then what does a breakout look like? Breakout, 1, 2, 3, breakout. There's no reason why this couldn't be a breakout. 1, 2, 3, breakout. All we need is that strong move down now. Strong move down, find that new channel, you got it, and sell out that channel high, right? 1, 2, 3, breakout, easy. Mark up that high, find that channel, right? And again, I draw that channel off of these highs because that's pretty much all you'll have to work with at that time, right? That will give you that location to buy off of that low. But again, got to be a strong break and got to keep going. We see lots of strong breakouts, but they can't hold, and they end up collapsing back down in. Don't be a victim of your own emotions, right? Have a plan and trade that plan tomorrow. And if you don't have the plan or you can't trade it on your own, right, find someone like me to come join with, right, and trade every day in our trade room. Let's keep going. Wrapping up tonight here on the euro. Euro's pretty easy. We're bearish, a strong bear spike, a hidden channel, and a kind of a pending measured move here right now. The momentum is clearly bearish. We have, of course, that big run down to finish off last week, a short covering rally on Friday, which we called a mile away last Friday, right, on the newsletter. So if you watched last Thursday night's newsletter, we saw this coming a mile away. And then, of course, right, those bears took it right back again. So we definitely what is oftentimes referred to as a dead cat bounce. I hate that term, but it is very fitting for this strong move down. People who thought this was a revival, they of course have that bubble has bursted, unfortunately. Momentum is definitely bearish. The plan is to sell at resistance levels overhead. So with such a strong move down, right, with such a strong move lower here, I would imagine anything shy of a straight line higher here is probably going to be seen as a selling opportunity here. So really, really bearish. I want to find some levels of resistance, right? So I'm watching these two lows. This is just like any other reversal, right? You get that low to low, find that low, right? It's like I'm not going to draw my channel like this, right? That's kind of useless. I want to find resistance levels I can use to sell, find those lows, mark that high. That's where we're thinking to be selling here tomorrow, right? If we keep going lower, we're going to keep that channel there and keep trying to sell off that channel high. Momentum is so strong right now that anything that pulls back is probably going to be seen as a sell. At the same time here, looking for levels of resistance. I've got that prior swing as a reversal line. I've got this little area right there, which is why I've got that battle zone a little bit lower. But I think from that 15,400 up to that 15,600, I think you combine that with that channel, and then you've got some great resistance up there. Now, at this point now, it's just getting up there and finding that pattern, right? So if we go higher here, if we end up going higher here, we've got that prior swing up there, so that will be your trap into the two-try failure, trap into two-try failure, right, into that pullback pattern. So 3 potential trades here right now. Trap high, right? Trap high into that 1-try, 2-try failure, right? Into that hidden channel pullback, right? So 3 potential patterns there as we go back down. Notice though, it all starts with what? It all starts with that rally higher. So once we get the rally higher, then we'll wait and see what we get from there, and we'll go from there. If the market goes lower here, right? If we keep going lower, this will turn into basically a spike in channel, right? And we talked about this earlier. What does a spike in channel tell me? There is a psychology aspect to this. Nobody's had a chance to sell high yet, right? The experienced professionals in the market going, come on, give me a pullback, will you? Right? And they want to see the market pull back. Usually, it's up around the base of that channel, the first pullback. Go up, right? And we're just looking for that. Again, trap, 2-try, pullback patterns, same patterns, right, we've been talking about here so far. All right, guys? Now, there's one thing I do want you to watch tomorrow, and that is if we do get this deep pullback, 2-try failure, and we fail to retest the low, right? If we fail to retest that low, then what's going to happen is it'll turn into a triangle, and we'll basically be right there with gold, right? We'll want to sell the high here, 1-try, 2-try, right, and back down. It won't affect us until we see that 2-try failure fail to retest its low. If it fails to retest that low and bounces back up, now we know what's really going on. Now we know it'll be a range, right? And then we'll know 1-try, 2-try, right? Let those buyers sort of reverse it. They're going to think it's a reversal, right? This would be a great way to pick the pockets of those bulls, because I guarantee you those buyers are going to be thinking this is going right back up to where it came from. We're not there yet though, right? Not so fast. It's a bear market still, and we're going to fade those breakouts until it changes. All right, guys? So we got some great opportunities here, both the buys and the sells for today. And don't forget, tomorrow morning, we open up our trade room at 8 o'clock Eastern time, right? And we're going to tame these complicated markets together. Our trade room is a great place to come in and learn the strategy, right? Learn by watching me execute the strategy correctly, right? I also get plenty of examples, right? I got a great free course here as part of our free trial. I got a free pass included with that free trial to come to the trade room, right? So don't take my word for it. Grab the free trial, grab the free trading course, learn more about how we trade here. And don't forget, if you have any questions, you can always, right, call that toll-free number. You can always use that live support tool. You can always reach out and ask for help as you need it, because I'm always standing by to give you guys the answers that you need. Guys, once again, thank you for being here tonight, right? Be well out there. Be nice to each other, will you? Be here next time. Adios, amigos. Bye-bye for now.